long last, I have created a YouTube channel. Thank you so much for viewing and subscribing. I'll be posting content on here, hopefully on a weekly basis with a couple of lives, shows that I already do, the Bootleg Weekly and the SoFi Weekly as well. The reason why I started this, you'll get to see probably in late November, early December. It's exciting news. I don't want to spoil that, but I appreciate all your support. I thought it would be fitting to start with a stock that I like to talk a lot about, that is PayPal. PayPal, of course, has earnings this coming Tuesday in the pre-market, along with SoFi. We'll talk about SoFi perhaps on the weekly tonight. But PayPal, I'm very excited for these earnings. I think that they will be a triple beat, which PayPal has had a tendency of doing that and of smashing market expectations. I think they may not be quite as good as quarter one and quarter two, but what's really unique about this are two things. First, as you've seen, if you're a PayPal investor, the market continues to actually pay attention to PayPal this quarter. That as partnerships, as new products, and certainly good news is announced for PayPal, and there's been a flurry of that through this quarter, the market actually reacts. Whereas in the past, it would just go to sleep and say, you know what, PayPal doesn't matter. This time, it's different. Now, a lot of the things that have come out in the headlines are not going to hit PayPal's top or bottom line very much this quarter, if at all. We'll take a little bit look at that as well. But I do think that in this earnings, there will be two elements that will be critical in taking out most of the remaining bear case on PayPal. Let's take a look. So we have here first earning expectations, and we can see that this says it's a miss. It wasn't actually a miss. PayPal changed the way that they report. They include stock-based compensation now. And so Yahoo, you need to get with it. But we're using Yahoo nevertheless. The estimate by analysts is $1.07. That's a consensus estimate. We have as high as $1.15. I think that's a little bit overly generous. Myself, what I am thinking and expecting is something a little bit closer. So I'm looking at $1.11 adjusted EPS, so a slight beat over what the analysts expect. Now, the analysts are also expecting a $7.88 billion print, which would actually be flat quarter over quarter. I'm not quite sure why they're getting that. I see $8.11 billion. Now, the reason why I see that is PayPal has launched a number of products which will begin to help them out this quarter. So first and foremost, they launched Fastlane, which of course is designed to generate obscene checkout conversions on their guest checkout system. They've partnered and they've launched this with many, even competitors in this space, although this was in August and it can take 2 to 3 weeks to implement. So we'll begin to see just the beginning of volumetric increases on that. The product itself is not monetized. It will be monetized next year. Yet nevertheless, due to the increased volume, PayPal should see some benefit. They, of course, also kicked off the PayPal Pay Everywhere campaign starring Will Ferrell. I'm sure you've seen the very catchy commercial. It was very well done. And of course, some Venmo marketing as well. Their marketing spend has increased. And as a result, even though that was late in the third quarter, they will see a little bit of benefit anyway on top of the normal growth that they were going to provide. Now, I also want to share with you a little bit of a good tailwinds that they have. Now, this is the DXY. This is basically an aggregate of looking at how other currencies trade with the US dollar. And if you look at year to date, so anything above 100 means that the dollar has been stronger than other currencies. Certainly the yen has been one of those things that's been featured. But if you look here, we actually got briefly close to parity for the first time in a couple of years. And so this is meaningful. So about half of the quarter, the DXY has been a little bit weaker. The way PayPal reports revenue is they have revenue, which is the real revenue. And then they say, well, hypothetically, if the dollar was neutral, the revenue really would have been like this. The reason why they report like that is because they are a global and an international company. And most global companies do something like this ever since COVID. And so since the DXY is a little bit weaker, they will certainly benefit somewhat from this as well. I think that they'll continue to see, also as noted in the earnings call previously, that if rates were cut early, which they were not, they were cut in September 30th, there would be some tailwinds shifting to headwinds, but we won't see any of that this quarter. I expect revenue will be quite strong, growing at about 7.5% year over year. And that is not the only metric that we're going to look at here. Beyond that, EPS, I think that it will slightly beat what the analysts are expecting. And there's a couple of headwinds, though, that do come into play. So don't be too shocked if you see that, although it still will be a beat. It just won't be as significant as previous quarters. Part of this reason, of course, is what we already talked about with the marketing spend increasing. That doesn't come cheap. Of course, they've been developing Fastlane as a new product. They've been rolling that with a pilot program. They launched their first developer day. And they mentioned that they were in quarter 2 that they were shifting the expense of the marketing spend to the second half. And so we'll see some of that eat into EPS. Not a big deal, but it's just there and it's something to be aware of. But I still think that their adjusted EPS will be $1.11 this quarter, a little bit higher than what analysts have and a little bit higher than what PayPal had also guided for. They also noted that they have a higher tax rate in the second half than the first, but they are buying back $6 billion. That was increased last quarter. And so about $1.5 billion worth of stock will have been bought back this quarter, likely at much lower valuations than we're currently seeing since we keep hitting 52 all-week highs. Great time to be a PayPal shareholder. Now, as far as the bear thesis in the dismantling of that, there are two aspects that I think that this quarter will really hit. So one of those, let's take a look here. Let me blow this up slightly more. This is the account activity metrics, and I'll zoom in just slightly here. So we can see here, these are the raw numbers, 428 million shrank down to 426 million. This was partly due to churn of some subsidized accounts, particularly in Latin America, where effectively PayPal was paying people to use our product. That's a Dan Schulman thing. It takes a year of inactivity to be rolled off of this. And so PayPal has been seeing that churn for a while since under Schulman, the previous CEO. The aim was growth at all costs. It didn't matter what margins, how margins were affected. Now, we did see in quarter 1, they added about 1 million, in quarter 2, 429. But the year-over-year number is what bears have been looking at. And those that are doubting and naysayers of PayPal, they say, well, PayPal has not yet grown in a year-over-year basis. Now, it's a little bit silly because we see the bottoming happen in quarter 4. And with the new products that they have coming out, such as Fastlane, whether that's involved or added or not, I expect that we'll see active accounts grow to about 431 million active users, maybe 432 million if Fastlane figures are added in there. Remember, if somebody doesn't have a PayPal account, they can sign up for Fastlane. And I'm not sure whether or not PayPal will count them as an active user or not. But either way, we're going to see year-over-year growth, actual inflection for the first time. And of course, we'll continue to see that in quarter 4 as they launch the Pay Everywhere program, as I see a lot more spend with Venmo, as I see that the app is increasingly better, the rewards are richer, and of course, Venmo is accelerating as well. We're going to see a lot more active users. I think we might even see 435 million in quarter 4, but that's one quarter out. Now, the other part of the bear thesis is, of course, margins. This is just something that I've been keeping track of and many people have been following. You can see the big blue line over here. Basically, it has been falling for some time. We did see some inversion in quarter 1. The gross transaction rate actually went up in quarter 2. And yet we can see that the total take rate, let me blow it up just slightly more, actually fell slightly, as well as the transaction take rate. And so this is a quarter that I think we'll see something a little bit different. Now, the reason why is that they basically went into it in quarter 2. That it was very interesting and actually surprising to me that Braintree, which is their unbranded payment processor system, it actually contributed positively to margins for the first time, as did Venmo. See, PayPal is having these conversations with vendors, and they're trying to price to value. That may mean slightly slower revenue growth on the short term, although they are continuing to improve their products in a meaningful way for both merchants and consumers. And so I don't think that that'll be an issue for very long at all. But their margins will continue to increase as contracts are re-signed, as they're looking at, and Alex Chris's driving motive throughout this year was to expand profitable margin growth, margin accretive growth. And so perhaps that's why we saw late last year Amazon and PayPal break up and say, hey, we're no longer with each other. You can't use us. You can't use Venmo anymore with Amazon. We did see a new partnership, by the way, this quarter. And so PayPal is certainly growing. I think that between the two elements of the bear case that says the margins will continue to be compressed and active users will continue to fall, both of those will be proven false this quarter, along with a triple beat and what I expect will be a fantastic guidance increase. Why would guidance be increasing? Well, they tend to do this every single quarter. In fact, they have under Alex Chris, with the exception of his first full quarter. It was kind of the kitchen sink quarter, not uncommon for new CEOs. But beyond that, we see all these new products. We, of course, see Fastlane. We saw the advertising platform launch. They'll continue to expand that, but it launched early. We were told to not expect that until next year. And yet, under Dr. Mark Gaither, who also started the Uber advertising platform and was involved with Amazon's as well, which are massive, massive players in both of those ecosystems. It's now launched. We'll begin to see some of those elements of growth from Fastlane and also the advertising platform in quarter 4. With more users, with increased holiday spend, with a pay everywhere, with an improved app, with improved onboarding through the developer day rather, we're going to see a lot of good things for PayPal in quarter 4. And most critically, Alex Chris has said that none of the guidance currently contains anything from any of the first look products that were first announced back in January. Next, in quarter 4, we will see some of the fruits of that, which is not guided in at all. And so I think some of that will be put in the guidance. This will be a quarter that will surprise many people. Stock can do anything. I'm in this for a long haul, and I can't wait to see on Tuesday what those earnings will post. Anyway, thank you for tuning in and for all your support. Bye for now.